Welcome back to Smart Stock Sam, the channel where we cut through the noise and bring you in-depth analysis. I'm Sam, and today we're diving into one of the most jaw-dropping stories in the semiconductor space right now. A company that just raised $400 million in a single deal saw its stock nearly triple in 10 days, and then watched it crater by over 20%, all within the same 2-week window. We're talking about POET Technologies. Before moving on, here's a question I want you to hold in your mind throughout this video. What would it take for a company generating just over $500,000 in quarterly revenue, not profit revenue, to be worth nearly $2 billion on paper? Because that's exactly what's happening here, and understanding how the market gets to that number is the entire story of POET Technologies in 2026. Now, here's the gist of everything we're covering today, right up front. Is this $400 million capital raise a genius strategic move that de-risks POET's entire future? Or is it a dilution bomb quietly hollowing out your position while the company sells you a dream? We're going to cover the parabolic price move, the financial scorecard, the balance sheet, the legal landmines, the options market signals, a valuation that will make your jaw drop, and what you should actually be watching in the next 60 days. By the end of this video, you will know exactly what POET is, what it could become, and what has to go perfectly right for this stock to even justify where it's trading today. Let's get into it. But before we look at the future, we have to understand exactly where the stock stands right now. As of our latest data, POET is sitting at $13.07, down roughly 8% in the most recent trading session alone. The technical status? We're calling this a classic parabolic move and crack. Now, for the bulls in the room, there's one massive number you need to keep front of mind: $430 million. That is the estimated post-offering liquidity sitting on POET's balance sheet. On the flip side, the technical stance has shifted to what we call a sell-neutral posture, with an RSI, that's the relative strength index, sitting at 39.65. When RSI dips below 40, it tells you sellers have had control. The market is currently in what I call a digestion phase, where traders and institutions are genuinely wrestling with one question: does the size of this capital raise actually justify the extreme volatility we've seen? And to understand why that digestion is so uncomfortable, you have to see the sheer scale of what happened to this stock price in a single month. Look at this chart. On May 4th, POET Technologies was a $7.11 stock. Nothing flashy, nothing parabolic. Then, by May 14th, just 10 calendar days later, it hit a 52-week high of $20.81. That is nearly a 300% move in under 2 weeks. Think about that for a second. If you had put $10,000 into this stock on May 4th and sold at the peak, you'd have walked away with roughly $29,000. But here's the thing, almost nobody catches the exact top. And what goes up that violently almost always comes down with the same force. We've already seen a violent retracement pulling the stock back toward the $13 level. This isn't random market noise. This is what happens when two massive opposing forces slam into each other at full speed. So, what were the forces that lit the fuse, and what hit the brakes? On the bullish side, it was a 1-2 punch that lit the market on fire. First, POET announced a strategic agreement with a company called Lumilens, an initial order worth $50 million, with a broader framework that could expand to over $500 million in total potential revenue. $500 million. For a company this size, that's not just a contract, that's a potential company-defining moment. Then came the second punch, a $400 million direct offering, which was priced at $21 per unit. And here's the detail most people glossed over: that offering was priced above where the stock is trading right now. An institutional investor looked at POET and said, "I'll pay a premium for this." That's not nothing. But then came the brakes, and they hit hard. We learned about a major setback in POET's relationship with Marvel and Celestial AI, two enormous names in the AI infrastructure space, stemming from alleged non-disclosure agreement breaches by the company's own CFO. Relationships and trust are everything in the semiconductor world, and even the suggestion of an NDA breach sends shockwaves through potential customer pipelines. Then, layered on top of that, a short seller report from a firm called Wolfpack Research dropped allegations around something called PFIC tax penalties, a complex tax status that could blindside American investors holding a Canadian-domiciled company. These two pieces of negative news hit simultaneously and triggered a 22% single-day collapse. Millions of dollars in market cap evaporated in hours. Now, while the headlines are focused on lawsuits and billion-dollar frameworks, the actual financial scorecard tells a much more nuanced story. And you need to see both sides clearly. If we look at the first quarter 2026 numbers, it's genuinely a tale of two cities. On the positive side, revenue. POET absolutely crushed consensus estimates, bringing in over $503,000 in quarterly revenue. And before you say, that's tiny, listen to the growth rate. That is a 202% increase year over year. For a company still in the early commercialization phase of a brand new photonics platform, that kind of top-line trajectory is exactly what growth investors want to see. The direction is right. However, the bottom line tells a different story. POET reported a GAAP net loss of $12.3 million, or 8 cents per share. Analysts were only expecting a 5-cent loss. That is a meaningful earnings miss, and it signals that the cost infrastructure is still running heavy relative to revenues. Cash burn for the quarter held steady at $8.8 million. Now you might be wondering, how does a company losing $12 million a quarter even stay in the game? And that brings us to the part of this story that is genuinely wild. This is where things get insane. Post-offering, POET is sitting on a $430 million cash position. Let that number sink in. With an annual burn rate of somewhere between $40 and $50 million, the company has a multi-year runway, potentially close to a decade of operational fuel, depending on how aggressively they spend. Their debt-to-equity ratio is a nearly flawless 0.04. They are not leveraged, they're not fragile, but they aren't just sitting on that cash either. Management has earmarked these funds for a 10 times capacity expansion in wafer production and optical engine assembly, targeting full ramp by 2027. They're not trying to survive the next 2 quarters. They're trying to build a manufacturing powerhouse in the heart of the AI photonics supply chain. But here's the catch. You don't get $400 million for free. And that leads us to what I'm calling the dilution paradox. And this is the invisible bridge that most retail investors completely miss. In the short term, this offering is pure pain for existing shareholders. POET added 19 million new common shares to the float and another 19 million warrants on top of that. That's a massive injection of new supply into a stock that was already running on momentum. It effectively killed the breakout and handed short sellers a perfect argument. But, and this is a critical but, in the long term, this might be the single best strategic decision POET's management has made. By securing $430 million now from a major institutional player like MMCAP International, they've ensured they can actually fulfill those huge AI infrastructure orders without being forced to raise cash later under potentially terrible market conditions. They've bought themselves time, capacity, and credibility. And whether that trade-off was worth the dilution is the central debate that's going to define this stock for the next 12 months. So if the company is now supposedly de-risked, why aren't big institutions and analysts all rushing in at $13? Well, some are buying. Citadel Advisors was building a significant position earlier in the year, and MMCAP is clearly doubling down in a major way with this $400 million deal. Overall, institutional ownership sits just under 10% of the float, still relatively light for a company making this kind of noise. But look at where analysts have their price targets. The base consensus is actually down at $8.20, well below where the stock is trading today. Meanwhile, if you build a forward-looking valuation model around the Lumilens framework and the manufacturing ramp, you get a fair value closer to $17.37. That's a massive disconnect between what the math says and what the story says. And right now, this stock is a story stock, which means the narrative carries enormous weight. But part of the reason analysts are so cautious is the legal cloud that is hanging directly over this company's head, and we have to address it head-on. Multiple heavyweight law firms, including Rosen and Pomerantz, have filed class action lawsuits against POET Technologies. The core allegations center on two things. First, that the company allegedly misrepresented its passive foreign investment company, or PFIC, tax status, a technicality that carries serious tax penalties for American retail investors who didn't realize they were holding this type of foreign entity. Second, the alleged failure to properly disclose the NDA breach risks with Marvel and Celestial AI before those relationships fractured. Add on to that the ongoing short seller pressure from firms like Wolfpack Research and Night Market calling POET a stock promote, a company being marketed beyond its actual fundamentals, and you have a recipe for fear, uncertainty, and doubt that could suppress this stock regardless of how well the revenue grows. These lawsuits aren't just distractions, they represent a real, sustained overhang that institutional money managers hate sitting under. Now, if we look past the headlines and purely at the technical picture, the charts are telling us a very specific story, and it isn't pretty in the short term. POET is currently trading below its 5-day, 10-day, 20-day, and 50-day moving averages. That is textbook short-term bearish structure. Every one of those moving averages is now acting as overhead resistance, meaning every time the stock tries to rally, it runs into a wall of selling from people who bought in above current prices and are looking to break even. However, and this is important, the stock is still trading well above its 200-day simple moving average, which sits down at $6.66. That tells us the long-term trend has not been broken. This looks like a painful correction within a longer uptrend, not a structural breakdown. The real kicker, though, implied volatility is sitting at 167%. That is among the highest you'll find in its entire peer group. What that practically means for you as a trader is simple. Double-digit daily swings are not unusual. They are the norm. If you can't stomach seeing your position move 10% in a single session, this is not the stock for you. But while the price chart looks rough, the options market is whispering something that deserves serious attention. Check this out. The put-to-call ratio on POET is just 0.17. That number is staggeringly bullish. Despite the pullback, options traders are loading up on calls with far more aggression than they're buying protection on the downside. Sophisticated market participants are clearly positioning for a recovery. We also have approximately 14.6 million shares sold short, roughly 9.6% of the float. With days to cover at only 0.22, a prolonged short squeeze isn't the base case, but the stock remains extraordinarily sensitive to any positive catalyst. One clean headline could send this thing spiking hard in a single session. And speaking of valuation, we need to talk about the number that should make every rational investor pause and think very hard. 1,200 times sales. Let that sink in. At $13 per share, POET Technologies is trading at a price-to-sales ratio exceeding 1,200 times. The market is not pricing POET on what it earned last quarter. The market is pricing in the perfect execution of a 10 times manufacturing expansion, the complete conversion of the $500 million Lumilens framework into real invoiced revenue, and POET emerging as a dominant force in AI photonics infrastructure. That's a lot of perfection baked into one stock price. And here's the question I want you to sit with. What happens to a 1,200 times sales valuation if even one of those assumptions doesn't play out on schedule? Can this stock actually stay above $13 if the Lumilens revenue doesn't show up in the next 2 or 3 quarters? What are the realistic odds that everything goes exactly right with zero delays, zero customer defections, and zero legal disruptions, all at the same time. So how do we think about trading a stock that is technically broken, potentially de-risked, and priced for perfection? For the trading window of May 20th through the 22nd, the setup is a speculative hold and watch. If you're looking for a potential entry, you want to see this stock stabilize and hold above $13. That's your line in the sand. The target entry zone is $13.10 to $13.25. Hard support on the downside sits at $11.31. That's the 20-day moving average, and a break below that level would be technically significant. On the upside, if POET can clear and hold resistance at $13.32, the technicals point to a potential gap fill run back towards $17 to $18. But with 167% implied volatility, tight stops are not optional. They're survival. And this setup only matters if the company hits the milestones coming up, because the next 60 days are absolutely packed with potential catalysts. 3 dates you need to circle in red on your calendar right now. First, revenue conversion. Watch closely for when that $50 million Lumilens initial order actually begins showing up in POET's financial statements. That's the moment the story becomes math. Second, June 26th. That's the scheduled shareholder vote on whether to re-domicile the company to the United States. If this passes, it directly addresses the PFIC tax concern that's been scaring American retail investors and potentially broadens the institutional investor base dramatically. Third, June 29th. That's the lead plaintiff deadline for the class action lawsuits. Any news around settlements, dismissals, or new filings around that date could move this stock hard in either direction. Now, before I give you the final verdict, I want to be completely transparent with you, because this is a channel built on trust. Nothing in this video is financial advice. I am not a licensed financial advisor, and nothing discussed here should be interpreted as a recommendation to buy, sell, or hold any security. All information presented is for educational and informational purposes only. Investing in individual stocks, especially high volatility, small-cap growth stocks like POET Technologies, carries substantial risk of loss. Always do your own research, consult a qualified financial professional, and never invest money you cannot afford to lose. Past price performance does not guarantee future results. Now, the final verdict. POET Technologies is a high beta story stock sitting in the middle of a painful but necessary transformation. They are attempting to cross the chasm from development phase startup to volume manufacturing powerhouse in one of the most competitive and capital-intensive spaces in technology, AI photonics infrastructure. The $400 million raise gives them the fuel to potentially execute on that vision. But the mechanical dilution from 19 million new shares, the legal fractures from the class action suits, and that eye-watering 1,200 times sales valuation mean that the next 3 to 6 months are purely a show-me period. If they execute, if Lumilens revenue hits the books, if the re-domicile vote passes, if the manufacturing ramp begins on schedule, then $13 will look like a gift in hindsight. But if they stumble on even one of those fronts, this valuation has nowhere to hide. Watch the $13 support, watch the June milestones, and let the company prove it with results, not press releases. Now I want to hear from you. Here's my question for the comments. If POET successfully converts the entire $500 million Lumilens framework into recognized revenue, what's your fair value price target for this stock? And why? Drop it below. I read every single comment, and I genuinely want to know how you're modeling this. If this video gave you clarity on a confusing situation, please hit the like button right now. It genuinely helps this channel reach more investors who need this kind of analysis. And if you're not subscribed yet, what are you waiting for? Hit subscribe so you never miss a deep dive like this one. And if you really want to support what we're building here at Smart Stock Sam, you can send a super thanks right here on YouTube. It means the world and keeps this independent research going. This is Smart Stock Sam. I'll see you in the next update.